Gareth Soloway from InTheMoneyStocks.com returns to give us his view on gold, silver, oil, and what happened with nickel. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Gareth Soloway, welcome back to Metal Money. How are you doing?
I'm doing really well. Thank you for having me back.
Glad to have you back on. Gareth, last time we spoke back on January 31st of this year, 2022, you were looking at an oil price decline and a possible stock market crash. Are you still seeing these two things happening, or has anything changed or caused you to revise your outlook?
Yeah, so definitely the war with Ukraine, with Russia invading, caught me a little bit off guard. And luckily, I was in a position where I could average in, and I averaged into the upside all the way up to 130. And then when we got the dump out, and you can see it here on the chart, when we got the big dump all the way back to 94, I actually was able to move out of my position. So did catch me off guard, but a good trader has that maneuverability. I think one of the best rules for investors to follow is that anytime you think you're going to be right, never assume it, right? So always have a backup plan. In other words, don't go all in at one specific level. And luckily, with my members and I, we did it smartly. We did a little bit of a short at this range here. And then when it popped up, we added, and we accumulated. And then when we saw the fall, it had a beautiful dip. Now, one of the things to note here is we've had a bounce back up. I reshorted oil up here. The reason I'm still bearish on oil is because the amount of demand destruction that this level of oil is going to do is going to easily supplant anything we lose from Russia. The impact on the global economy of this high oil price is just going to be very, very detrimental. So you're going to see a lot less driving, a lot less flying out there, and that will ultimately push prices lower. I know there's a lot of people saying $150 a barrel, maybe $200 a barrel. I am not in that camp. I actually think by the fourth quarter of 2022, we should see $75 a barrel on oil.
Okay, quite a dip. Sustained at 75 after that, or is it just still going to be kind of volatile?
Yeah, so I think that, I mean, basically what I have here on the chart, and I can show you guys. So I think the initial first step is going to be right here around this $85 level. There's a former pivot going back to October, November. And then I think you kind of settle in here at 75 for a little while. But I do expect, and this is the kicker, right? So not only do you have high oil prices that's going to hurt the global economy and really hurt demand for oil, but you're also having a Federal Reserve that is saying, hey, listen, we don't care if the economy is slowing down a little bit. We need to tackle inflation, and therefore we have to hike interest rates. And now they're talking about 50 basis points the next two meetings. Remember, raising interest rates hurts the economy. It slows the economy down. So you're going to also have this secondary factor later in the year where the economy starts to look a lot weaker because of high interest rates. Well, not high interest rates, but slightly higher than what we've been having recently. And that will also put more pressure. So I think, again, by 2023, you could be looking at sub $50 oil.
So here we are today, and we're seeing volatility with commodities such as gold and silver. And not only that, we're seeing a fair bit of resilience between the two metals bouncing back. Can you tell us what your technical analysis is showing you for gold in the short term?
Yeah, absolutely. And I think when I was on with you in January, I kept on saying, hey, listen, gold is going to break out. Be ready for the breakout here. The trend line we were watching was right here, right? So from the high in 2020 to this pivot here and to this pivot, and right into January, we saw this big move and breakout. And this coincided with the invasion of Ukraine. And that kind of put this major move up that took us to a classic technical double top. Now, short term, that's resistance. You've seen price pull back. I actually think you're going to see even more price pull back down to about 1850 or so. And then I think it's off to the races north of 23 to 2400, maybe even 2500 by year end. But again, right now you're in this kind of period where you had a big move. Price needs to check back. Use it as a buying opportunity. I certainly will be using it as a buying opportunity.
All right, so we're looking at a little dip before gold starts to go off to the races later on this year. How about silver? Likewise, through your technical analysis, what seems to be lining up for silver in the short term as well?
Yeah, silver, the chart broke out as well. So that's a positive for silver. Silver's the one I think last time we chatted, I was a little bit more kind of iffy on because you have the industrial side. And I really do believe that the economy is going to start to slow throughout the course of 2022. However, the chart is always in charge, right? So whatever I think doesn't really matter. What does the chart tell us? And the chart tells us that this trend line has been broken. You are now above it, which means as long as you stay above it, you buy any kind of retrace. I'm buying $24 or a Pierce of 24 on spot silver. And I think you're going to head up probably by year end or even prior to year end to retest $30 per ounce. So I'm a bull on silver, might just have a little pullback with gold. And by the way, in all fairness, if for some reason the Russia invasion escalates, let's say it draws in NATO, well, then any sort of pullback is off the table. I mean, we have to be realistic about this. You get a sort of a global world war, and gold is going to be the place to be. So just be understanding that I'm a swing trader. I'm a nitpicker in terms of price action. So I'm waiting. But if you have a horizon on gold of like 2 to 4 years, it doesn't matter. Same thing with silver. What's the difference between $1 on silver if I truly believe it's going to $50 an ounce over the next few years? So again, make sure you understand that. I'm a swing trader, which is much shorter term. I'm looking for a little bit of a dip, but not everyone's in my boat.
Gareth, recently we saw nickel go to the moon and then it came back. And the way we saw it shoot up on a short squeeze, and then we had the exchange closing, and then basically only a downward price action was sort of allowed. I'd like your take on what happened here.
Yeah, I mean, absolutely insane the moves that we've seen on nickel, right? And nickel to me, it probably was a classic short squeeze. It was classic panic type situation. We know that, again, a lot of the nickel coming out of the global picture comes from that Russia area. So again, traders just got squeezed. I'm sure there were some shorts in there, much like an AMC or a GameStop situation where the shorts just had to cover. Price went against them. There were probably some funds that were over leveraged. They had to kind of exit, and that created this epic spike in nickel. Now, we did see it pull back quite substantially, right? So, I mean, I think that's important to note. If I go to my nickel spot price here, let me go to this one here on the chart. And what we saw is, as you mentioned, it came all the way back in. And again, I think that tells you more where real price should be. So again, price is now moving back up after that drop. My guess is it'll settle in around this area right here on the chart. But I mean, this is a wild time in the investing world, right? Volatility has been off the charts. Commodities have been going nuts. Inflation, we haven't dealt with inflation like this since the 1970s. So you have that as an extra issue for investors to deal with. It's a great environment if you're a swing trader, but again, you have to be ready for the swings in the market.
And the reason why I asked about nickel was because I'd like to know your opinion. Can this happen on the COMEX with precious metals?
Wow. The answer is yes, to some extent. The gold market in general is more liquid, as is the silver market, so it makes it a little harder for a squeeze like this to take place. But there certainly will be, and we saw it. I mean, if you go to the silver chart and you go back to, I think was it 2012 or something like that? Let me go back here and see on the chart. Yeah, 2000. Well, we had this big move here, but let me go back to my weekly chart. Yeah. So I still remember vividly when we had this move going back to 2010, where we went from basically 18 to $50 per ounce. So that's more like what I'm expecting. So it's not quite as vertical in such a short amount of time on silver. But I do think we do get in another situation where when 30 is broken, the $30 level, which again is this high right here with this high, when that gets taken out, I do think shorts will cover. I do think the momentum traders will pile on, and you will get a very quick move up from there.
Gareth, if my memory holds up, I remember GameStop, I remember that Robinhood app, and I remember the SEC, the media, the pundits, financial news networks coming after that Robinhood app and saying, this is what happens. These are amateurs. You should leave it up to just professionals. And here we saw it happen with the LME. What's your take on that as well?
Yeah, so I've always been an advocate for personal responsibility. When I make a bad trade, it's my bad trade, no one else to blame. So I'm not a big fan of Robinhood or any other player getting involved and saying, hey, listen, we're not going to allow selling or shorting. We're not going to allow buying, in anything. I think that, again, each person, whether they're knowledgeable or not, can make that decision with their own personal wealth to decide what they want to do. To restrict it is, it kind of creates this oh, we know better than you environment. And I was a new trader at one point. I took a lot of hits. I learned a lot of lessons the hard way. I think that everyone needs to go through that. And it's kind of like a kid. I mean, if you have a child, and I have two children, if you put them in a bubble and you don't let them ever fall down, if you don't ever let them try to jump from one place to another, and maybe they get hurt a little bit, they're never going to learn. And I'm a big fan of just letting people do it themselves, figuring it out. It's not going to end out always great. And in fact, we look at AMC and GameStop, they've come way in off of their highs, just like Bitcoin. I'm sure a lot of people got hurt. But at the same time, the idea is you have to learn. You can't go to being a pro trader without taking some losses along the way.
Okay, last question here before we wrap up. Why do exchanges, time and time again, it seems they will err on the side of shorts and not on the side of longs or those who made the profit? Like we saw nickel after they closed down the exchange is basically only a downward price action, nothing going up.
Yeah, I mean, that's a great question. It's a very common thing where a broker, and I've had this experience too, is where, if in fact, just to give you guys a real life example, and it's not the greatest of examples because it doesn't, it's actually a losing trade, but I'm currently in this stock right here. It's an ETF, the RSX. So I bought this over here, and it was pretty close to the lows. And there was a point where my broker said, "Hey, listen, you can't buy anymore, but if you have the position, we can't keep you from selling it." In other words, they weren't going to restrict me since I had the shares from unloading them. Now I ended up holding it and it got halted. And my hope is that at some point, Kumbaya takes over and maybe Putin's not in power. And then, these sanctions get lifted. And my hope is that this gaps up to $20 at some point in the future and I make a lot of money. But the brokers, I think, are trying to protect people again, kind of going back to our previous discussion, but they also recognize that legally, I'm not sure if they can keep someone from unloading a position. They can say, listen, no one can buy this position because you don't have it, but I don't think they can say, listen, if it's trading, you can't sell. I believe the SEC would have an issue with that.
Okay, that's an interesting take. I guess you really can't argue that. Gareth Soloway from InTheMoneyStocks.com. We appreciate the info you've given us, the insight, and I hope we can do this again real soon.
Yeah, thank you so much, Patrick. Always a pleasure.
There you go, Gareth Soloway giving us his take on some of the volatile commodity kings. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.